Post-pandemic, we've seen a large number of borrowers looking to raise capital to inject into their business or to repay back business debts. In this video, I'm going to explain how you can raise funds against your home to inject into your business or to pay back business debts. My name is Gindi. I'm one of the senior advisors at Create Finance. Let's get into the video. So let's look at some of the reasons why you may want a capital raise for business purposes. Number one, to inject necessary working capital back into the business to repay suppliers or to cover your fixed costs such as rent or pay wages. Lenders will want to see that it's not a failing business, so they may want to see an order book or invoices to make sure that there's revenue coming into the business going forwards. Number two, you may want to raise funds to cover a deposit for a new premises to expand your business. Number three, you may want to raise capital for new machinery or new equipment. Number four, it could be to fund a startup business. And number five, in some instances, lenders will allow you to capital raise to repay an outstanding corporation tax bill or a personal tax bill. The lender will want to make sure that the business is classed as a going concern. So essentially, the lender will want to make sure that the borrower can meet their financial obligations for the next 12 months. And after 12 months, there isn't going to be an outstanding tax bill to repay once again. Once you've established your reasons on why you want a capital raise for business purposes, the next steps is to speak to a qualified broker. What the broker may need is copies of your limited company accounts if you're a limited company director, or if you're a sole trader, they'll need to have your latest tax returns, latest tax calculation and overview. They may need to check your profitability over the last 3 years. When you are remortgaging against your home for business purposes, a good thing to know is that depending on market conditions, you can actually borrow up to 85% of the value of your property, subject to market conditions. It's also good to know that if you do have some bad credit, such as a CCJ, a default, or a previous bankruptcy or an RVA, that there may be some options for you. As there is a limited number of lenders available for you for capital raising for business purposes, just to make you aware that the interest rate may be slightly higher than the standard mortgage when you are raising for these purposes. If remortgaging your residential property isn't suitable for you, there are alternative finance arrangements available for you if you do want to capital raise for business purposes. Number one, you could consider a bridging loan. Now, historically, bridging loans are very, very expensive to set up. However, it could give you some sort of breathing space while you do look to dispose or sell any assets. And number two, you could have a second charge loan which sits behind your first charge mortgage with a main lender. However, if you are looking to fund new machinery or new equipment, or raise a deposit for business premises, or repay an outstanding tax bill, remortgaging your residential property could be a good solution for you. So if you do want to remortgage your property for business purposes, make sure you speak to a mortgage broker that's got a comprehensive list of lenders available for you. If you'd like to learn more about mortgages as a limited company director, please check out this video.